Welcome back, everybody. So this is the second part of our series of vodcasts with Ian Morgan, who is the owner of MBS Accountants. And the vodcast is all about how to successfully plan for a recession, which I know is something that a lot of business owners are probably worried about, concerned about, and thinking it's potentially, if not very likely, going to happen. So the previous podcast, we spoke about the three fundamentals, and we started with the first one, which was financial control. So I know in this one, Ian, you're going to be telling everybody about financial clarity. And for the people who've just hopped onto this one and didn't see the previous one, Ian's business isn't what you would call a traditional accountancy. So they very much about working with their clients. So not just doing your monthly accounts, your VAT returns, your tax returns, and what you would consider to be a traditional accountant. They work with their clients, they communicate with their clients, they understand what their clients need, and they help them grow their businesses or sustain their businesses, or if they're planning to exit the right way, and the most preferential way for the people within that business. So Ian is very, very, very good at what he does and is more than happy, to sit down and speak to people and have a conversation and find out whether, he's the right accountant for them and whether he can possibly help those clients. So it's over to you, Ian.
Yeah, thank you very much, Sam. So obviously, Sam, as you alluded, we talked about financial control, first of all. So presuming that you've gone through and you've done those sort of steps of having some degree of financial control, the next step is, yeah, but what does it mean? And you go, does that mean I've got to learn and I've got to learn to be an accountant and I've got to understand accounting because it doesn't make sense? And the answer is no, but you do need to understand your own business, its financial performance, and whether that is good, bad, or indifferent. Because if you don't, we go back to, I think, a topic we were talking about at the end of the previous episode, which is, do you know whether you're winning or losing? And actually, if you don't, you might have the data, but if you don't know how to interpret it and understand it, then that's all very well having financial control, but you're not doing anything about it. That's like knowing that you've got a hole in your bucket and then you just ignore it because you don't know what to do about it. So how do you get yourself financially educated? Now, the great thing is, obviously, with modern day, when we've got podcasts, we've got vodcasts, we've got YouTube, there are lots of tools and resources and information out there where you can go and understand accounting. But the mindset, in my view, that you need to go into it is, I'm not learning to be an accountant. I'm learning how to understand and interpret my own financial results to bring me one step closer towards the step 3 we'll talk about, which is financial freedom. Because if you want financial freedom, you need to understand if you're on that pathway or not. There's some key concepts, and I think one of them probably causes the biggest confusion. And somebody who hasn't been in business for at least 1 year and seen a set of accounts probably won't have experienced this yet. And that's that when you see a set of accounts, you see all these numbers and there's a pound signs on there. And it's so easy to go, it's a pound sign, that's money. And actually the reality is profit of a business does not mean cash. So when you're adjusting for, the difference or calculating the profit of a business, there's multiple adjustments and things that are going on. To keep it simple, if you're VAT registered, for example, that profit and loss account doesn't account for the VAT you've collected or the VAT you've had to pay across, or the VAT that you've had to pay suppliers. It also accounts for things like depreciation. And so you may have bought yourself some new tools or a new computer. That doesn't appear, the main computer or the main asset doesn't appear in that profit and loss statement. Only an estimate of how much the value was reduced in the current year. So you may have spent £1,000, but it might have only gone down by £100. So therefore, at the moment, that profit and loss statement looks like there's more profit than actually the cash that's been spent. And the other then is other things that are going off off that profit and loss statement. So there's things that don't appear there, things like loan repayments. Only the interest element of that actually makes it onto the profit and loss statement. So this just starts to cause this extra confusion where you're going, yeah, but it's got pound signs. It must mean money, surely. And I think the most common answer or question probably from business owners to their accountants the first time that they really delve into a set of accounts is to go, there's no way that profit figure is correct, because if it is, then where's all the money gone?
Yeah, and that's a really good point, and I think the point of these podcasts is to speak to experts like yourself and make people think. And I'm not an accountant, but I know if I look at zero, you see the pound signs, that's you just automatically, to me, a pound sign is a good thing. It's money. That's the money that we've got. But yeah, that is a really, really good point, and that's why business owners need to make sure that they do their research. And also the point that you made about not learning to be an accountant, you just need to understand your accounts, because hopefully when your business is successful enough, you'll be able to employ an accountant who can do all the hard work, who's qualified, and who that's their job. Don't try and be an expert in everything when you're running a business. You stick to what you know and let other experts help you.
Yeah. And then I've probably got two other sub points probably relating to that. One is that you could argue the flip side is, well, can you not just run your business from your bank account? Yeah, you don't need the accounting information and data, because actually, well, yeah, we were talking about the difference between profit and cash. Well, let's just run it based on cash then instead. Let's just look at the business bank account and make our decisions from there. The problem is that as the business gets busier and you can't remember every possible transaction that's ready to be processed, you've got direct debits coming up in the future, you've got, I don't know, a VAT bill that's 6 weeks away, and you've just got this danger element that you forget or you miss something. The consequences of missing something or getting it wrong hits your pocket as the business owner. Because ultimately, if the business doesn't have the money, the bit that's going to give is you getting paid. So it's in your best interest to get yourself educated, to understand, because if you don't, the person who suffers is you. And we have this underlying mission, myself as a person, but also for our company, in that, and it was a piece of data that started this journey, which is the average business owner in the UK makes less than £8,000 profit per year. Okay. And we were like, if you know then that the average business owner probably works 60, 70-hour weeks, then you're going, that is absolutely massively below minimum wage. And you wouldn't expect a member of your team to work for that. So why would you expect yourself? Because you're probably the most valuable member of the team, and yet you're getting paid the least and you're working the most. So you need to have a measure of how you change that, and that is that you need to get financially educated. Which that leads nicely then to the other point, which is to change the methodology. I mentioned previously about the calculation of profit is sales less costs equals the profit, and the profit means what you potentially can take out of the business subject to the cash being available. Actually, you need to start reverse engineering it and go, okay, if this is the profit I'd like, because this is what I'd like to be able to take out of the business, I need to understand my essential costs, what's absolutely really needed within the business, to then get, okay, what sales do I need to generate? The other costs, those ones now that are not essential, therefore, i.e. they must be optional, you now have a choice to make and to go, hang on, if that's an optional cost, I might be paying for, I don't know, that extra piece of software. But actually, if I'm paying for that, that means I can't take the money myself. So in which case, now you start to weigh up the decision and go, that wasn't the decision I was making originally. I bought it because everyone said it was amazing and it was great and it was going to be really good. But actually, I only log in once a month. So why am I spending £100 a month on that, for example, when actually that £100 is available for me? So a great little exercise we do when you've got the financial control is just go back through the last month, maybe even 2 months of your bank statements, and just highlight all your costs. And you go for green is like, that's absolutely essential. It must be in the business. You cannot remove it. A yellow is, we could remove it, but it would possibly knock the quality of what we do, or it would cause us some pain in our processes. And then red is, why on earth are we paying it? It's a luxury. And if at this stage I'm not being able to pay myself what I feel would give me a comfortable life, then that shouldn't be being paid for. And so you change the equation to go, actually, it's income less essential costs equals what I can take. And then if I want to pay more out for other things, I'm taking that out of my money. And it becomes, there's a pain point to that, to go, actually, oh, I've got to pay for it. And that just ups that level of the financial relationship you have between yourself and your business. And just to go, the goal is for me to make money. And it's very easy to go, yeah, business money, it's not mine. But actually, if you're spending the business money, the result of what's left is actually for you. So you are spending your money.
That is such a true point that I guarantee not many people think in that, use that mindset. The fact that you said financial education is so important, and then just to do that quick exercise, I think a lot of business owners would be surprised. I'm just paying for this subscription and it's only £10, and I'm just paying for this. But like you say, and a lot of the time it is the fact that another business owners are recommended something, but what's right for their business doesn't necessarily mean it's right for your business. And is it something that really you do need to automate, or is it something that you could just do manually, but it'll only take half an hour? That's not the most interesting job in the world, but it's going to save £20, and that's £20 that you could spend on Christmas presents or whatever. So no, that's an amazing point for us to finish on. I'm really looking forward to the final one. I do really think that a lot of business owners are going to be gaining a lot of knowledge and insight from what you're saying. So thank you very much.
Thank you, sir.
And we will see you for the next one soon.